All right, good morning, everybody. We got to 70. That's our cue to get started. Welcome to another May week. Monday morning is always great for all of us. Thanks for taking the time to be here with us. Again, Lorenzo Marquez. I hope I could see you all, but hopefully you can see me and hear me well. We have a very special conference put together for you guys, which is more of a Q&A format where we have an industry expert that will be addressing and answering any and all questions you may have. With that said, I'd like to say that this call is under our antitrust statement, which is available on the Rocket site. If you have any questions, by all means, please let us know. Today, we are going to focus on PPP. And before we get started, I'd like to introduce John Kaplan, our Managing Director, for a couple of announcements.
Okay, so thank you everybody for joining the call and also for understanding to have it on Monday. We wanted to address this issue, this hot topic early in the week because we know it's affecting everybody on a timely basis. I also want to thank Marcum LLP, which you'll hear me thank a lot throughout this conference today, but getting us the PPP application, forgiveness application, which just went out this morning. If you didn't see it, check your email. We just sent it out this morning. Hopefully you had a chance to maybe look through it before the call, but getting that information that quickly is extremely powerful. And thank you guys for doing that, both Don and Mike Trabert. We'll also be talking at the end of the call about our Finance Ambassador program, which Marcum LLP is going to lead for us, with myself being the moderator. So we'll be rolling out our Finance Ambassador program coming up in the next few weeks as well. So thank you, Don and Mike. I also want to thank Laser Products and Poseidon, who are sponsors of this call. I explained to them the time sensitivity and all the detail and all the questions are coming in this call. So they actually suggested we forgive the time and just dive in right into the Q&A and let's address some of the things that they have in place that on our future calls, so we can get right in and use all the time to answer some of the questions on the PPP. So thank you, Dan Lewis and Joe Alba of Laser Products and Poseidon, respectively. Also, we have on the call as well, the call is going to be led by Don Minotis of Marcum LLP. We're going to go through some of the questions that you guys saw in the PowerPoint, but we also have Armada Risk Partners, our insurance company, on the call as well, who are versed in some of the labor issues, some of the healthcare issues, and some of the business interruption insurance questions that might be on the top of your mind as well. Also, Dewan Quokey asked me to just, he's on vacation, actually, so he's not able to make this call, but he wanted to thank everybody. He's up and running. He also wanted to personally thank Poseidon for helping him get up and running so quickly. So his whole shop is a full-service Poseidon shop, and he's up in action. And he also was very appreciative of the GoFundMe money that we sponsored him on. He used that money. One of his guys got hurt during the cleanup process, so all that money went to the family that got hurt. One guy's foot got ran over by a tow motor during that moving the slabs outdoors. So the money did not go to waste. So he wanted to make sure that we thank everybody on that. So we're going to dive right in, and I want to turn it over to Don. Maybe she has a few intro words. Yeah.
Second, I just want to pass it over to Amanda real quick for any new member updates that we may have, and then we'll get started.
Okay.
Yes, thank you, Lorenzo. I believe we mentioned on the last call that we have Olympia Stone and Majestic, Marble and Granite that are new members, but recently we also added in service providers from Georgia, and that would be the new one for this call.
Thank you for that. And without further ado, we'll pass it over to Don. So as John mentioned, we did receive some questions from you guys. They've been populated on the screen. We're going to go through each of them individually. Some of them repeated, but We do want to make sure that you guys listen to the feedback that is provided by Dawn before you do the questions. And then if there are any additional questions or you want to ask additionally as to what she's talking about, then by all means, just go ahead and speak up. I think I'll learn how to use GoToMeeting fairly well. If in the chance that you get a phone call or an interruption during the call, please make sure you mute your phones or else we will mute them for you. And without further ado, Dawn, thanks for joining us.
Thank you for having me. It's a pleasure to be here this morning. I guess I would like to preface our conversation today by saying we don't have all the guidance. As indicated previously, we did just get the PPP loan forgiveness application, which we had the weekend to review. It answered a lot of our questions. It hasn't answered all of them completely. Some of the information based on what's been basically omitted, we're making some assumptions on, but we're hoping that further guidance will clarify a lot of our questions throughout the week, if not the next couple weeks. So we do know that time is of the essence. So this call was really, really timely considering the application just came out, did clarify a few things. And just so everyone on the call knows, we have a whole team of people here at Marcum around the country that have been pouring through all of the guidance and documentation as it comes out on a daily basis, which it literally has been updated for the past probably month on a daily basis. We all pour through it, so this is not just my interpretation. This is a group of really smart people around the country that have been talking about this, reading through it, and that's how we've come up with a lot of the interpretations that we have of the guidance right now. As we've gone through it each day, new guidance is recorded. That either clarified, proved us wrong, but basically that's where our information comes from. So I'm ready to dive into the questions now.
Yeah, she said it was fine.
All right, caller 29, we're about to put you on mute. Thanks for joining us. First set of questions come from Randy, and I'm sure you can read demo questions, but the question is, adding the owners onto payroll, will it increase headcount for the purpose of PPP loan forgiveness? That's the first question.
Yes, but again, it depends on the form of business. Remember that only S Corps and C Corps can have their owners on payroll for W-2 purposes. The law, the program, the PPP program does allow for owners that are pass-through entities. So, partnerships, single member LLCs, Schedule C filers, it does allow for them to include a wage or a pay owner compensation to themselves. So it will not increase your head count if you are one of those pass-through entities. And what just came out in the loan application, the forgiveness application, told us that the pass-through entity owners, they can pay themselves 8 weeks of their 2019 self-employment income as reported on your Schedule C. And there's some adjustments maybe to that without putting your owners on payroll. But again, it's up to a maximum of $15,385 for the 8-week period. And you are not allowed to, we did find out too that you are capped at whatever the lesser of those two amounts are. So it's either the 8 weeks of your 2019 income or the $15,385, whichever is less.
Got it. After the 8 weeks of when PPP money runs out, how will layoffs affect loan forgiveness?
We have not seen anything in the guidance, nor I was looking through the forgiveness application again this morning. There's been nothing that indicates that employers will be required to retain employees after the 8-week period. We're hoping that further guidance will clarify this, but as of right now, there's no certification, there's no caveat that employees need to be retained for a certain period of time. We're speculating that the reason is that they may come out with additional programs after the 8 weeks are up if we're still in this crisis situation.
Got it. Now, there's also been talks about this being a one-time 8-week process, but then something else may be in the future. Do you know anything about that?
I have not heard. I've not heard anything definitive. There possibly could be something else coming down the road. I know, that Congress is working through an additional package. I don't know how far that will make it. We've also heard some rumors that the government is also considering easing the PPP guidelines and restrictions and possibly extending the time you have to spend the funds. But again, nothing definitive has come down yet.
All right, I'll read them. Questions came in from Josh. Can we hire new employees instead of bringing back laid off employees?
Yes, you can. Yes, you
Okay.
can.
So how do you go about that process? Do you basically have to have the same number of count of people regardless of their information that was submitted for the application process?
Yeah, so there's going to be 2 tests for forgiveness to make sure that you won't experience any reduction in forgiveness. One of those is an FTE, and it's not an employee by employee basis. It's an average FTE over a certain look back period as compared to the average FTE over the 8-week period. Again, if you meet that FTE threshold, then it doesn't really matter who those FTE are. So as long as you get back to that FTE number of employees. And the look back periods are either February 15th of 19 through June 30th of 19, or the first 2 months of 2020. And you get to select which one you want to use. So you want to do those calculations now and select the lower one so you have a lower hurdle to get over during the 8 weeks.
Got it. Now, this next question is, how soon after the 8-week deadline can we drop back below the FTE numbers and still be forgiven?
Yeah, again, I think I answered this one with the last question, where we're saying we don't know if employers are going to be required to retain employees after the 8-week period is over. So we're waiting on further guidance on that. We've not seen anything in any of the guidance to date, nor in the loan forgiveness application, that indicates that employees have to be retained after the 8-week period.
Okay, and then the last question on this is $100,000 threshold. Can we increase some existing employees to 100K just to make sure that that threshold is met?
Again, we've not seen anything in the guidance to date that prohibits increasing the wages, except for the guidance earlier about owners' compensation. We are recommending that you maybe document a valid reason for the increase. So for example, hazard pay, we want to reward them for coming back and sticking with us through these difficult times, that kind of thing. So as long as it's, again, under the 100,000, and you can document your reason for doing it and not just to use up PPP funds.
So can you assign some of those funds towards bonuses that were supposed to be paid in Q1, for instance?
Now we believe that you can. Originally, we didn't think you'd be able to do that, but the way the guidance reads is anything that's paid within the 8-week period, it would be an eligible expense for forgiveness. So that leads us to believe that if it was incurred prior to the 8-week period but paid during the 8-week period, it would now be eligible for forgiveness.
Got it. All right. Now, another question comes from Joe. If we've terminated an employee during the 8-week periods and elected to pay them a severance, which is I think what we talked about, was that considered an expense for forgiveness? But I think your comment to that was that it's not necessarily explicit, correct?
It's not. Well, severance payments are allowed during the 8-week period. So those would be eligible expenses for forgiveness, yes.
Got it. Do you have to reach the 75% payroll spend to receive the forgiveness?
You do. Well, let me put it this way. This is something that the forgiveness application clarified this morning. 75% of what you spend out does have to be spent on payroll. If you do not spend the full 75%, but you spend something less, your forgiveness will be reduced. And there's a calculation within the application, which it's kind of convoluted, and without seeing it, it's kind of, it would be hard for you to understand what I'm saying, but there would be a reduction of your forgiveness, your eligible forgiveness amount, over and above the other 2 tests if you do not spend 75% of it on payroll. You will not lose your eligibility for forgiveness completely. It will just be reduced.
Okay, so let me ask you this question. How about it if you brought employees back in at a reduced salary rate, and you still have the same number of employees, and you're still meeting that 75% threshold? Do you have to bring employees back in at the same level as where you had them before? or can you make salary adjustments or lower salaries as you bring them back through get loan forgiveness?
So you could bring them back as long as you don't reduce their salaries by more than 25%. One of the other tests that I alluded to earlier was a wage reduction test, and that has a different look back period, which the application again clarified. That's going to look at your wages that you paid during the first quarter of 2020. You cannot reduce anyone's wages, and this is on an employee by employee basis. We're assuming, though, it would be position by position in case you don't replace, if you've laid somebody off and you don't replace them with the exact same person. You can, if you reduce wages by more than 25%, any reduction over and above the 25% would result in a corresponding reduction in your eligibility for forgiveness. So, for example, if you reduce wages by 30%, then your eligible expenses for forgiveness would be reduced by 5%.
Got it. Now,
So Don, as a clarifying question, is the 75% a percentage of the loan or percentage of what is spent?
What is spent?
What about the EIDL money? Would that affect PPP?
The EIDL money, if you got the advance before the loan, then the advance was required to be rolled in, and because it's already forgiven, it would reduce your forgiveness, the eligible amount for forgiveness, but it's already forgiven, so basically you can't get it forgiven twice is what they're trying to do. Loans that were received before, I believe the cutoff date was April 24th or something like that. Loans, EIDL loans, that if you use them for the same purpose as the PPP are intended to, then they would have needed to be rolled in. I believe if you get an EIDL loan, not just the advance, that as long as you use it for different purposes, you don't have to roll it into the PPP. But obviously that's not eligible for forgiveness.
Got it. Now, we're going to continue on with questions that were submitted prior to the call, and then we'll go back to the questions that are popping up on the chat box. Any suggestions on how to maximize forgiveness?
Probably the most important thing that you can do is to start paying employees as soon as possible once you receive the funds, even if you don't have work for them or are unable to open for whatever reason. If you keep in mind that the whole purpose of this program was to get employees paid and keep employees paid, so and that means even if they can't work, you are supposed to be paying these people. And remember too that the more you pay out, the more you can pay out, then the higher your eligibility for forgiveness amount will be. We talked a little bit about this earlier, offer bonus incentives to come back or as a thank you for staying with you. So yeah, if you can increase their pay a little bit if you don't think you're going to hit that 75% threshold. The other thing is do your look back calculations now so you know the hurdles that you have to get over. So make that determination of how many FTE you need to be at, how much you can reduce wages if you can't afford or don't want to increase them. If you laid off and so there was a couple there's a couple of safe harbors that if you laid off employees from the beginning of the year through April 26th, I believe, if you bring those employees back on to the level that they were at as of 2/15/2020 by June 30th, then none of the other forgiveness reductions apply. So, make sure that you hire back to the 215 level by 6/30, and then you won't be subject to those forgiveness reduction calculations. Same with wages. If you reduce them by more than the 25%, bring them back up within 75% of what they were paying by June 30, and those reduction calculations won't apply either. And then, I would recommend just make sure that you pay employees at least the 75% of their salaries during the 8 weeks. If you can pay them 100% or more, that will help maximize your forgiveness as well. And then don't forget about some of the other things that you can spend the money on. The 25% can be spent on rent. We do believe now that you can also use that for equipment leases. If you have mortgages or loans on a building or on equipment, the interest portion of those payments are also eligible for forgiveness. Utilities, we believe that, electric, if you have a business location, electricity, gas, some transportation, telephone, internet, those expenses are all eligible as well. So don't forget about those. In payroll costs, if you have health insurance paid by the employer, or if you match a 401k plan, all of those are includable in your 25% of allowable expenses for forgiveness. Same with, for payroll costs, any state unemployment taxes that the employer pays, those you can also add in and pay for with PPP funds. So don't forget about those kind of ancillary things, as everyone's focused so much on payroll. You still want to make sure that you pay as much as you can on the payroll expenses, but those other things could help you maximize your forgiveness as well if you don't think you can quite get there with the payroll costs.
Got it. We have some great questions coming on the chat box. And Jeff Payne, I'm going to go back to questions in a minute related to forgiveness transportation mentioned on there. Can you explain a little bit of what that means?
Transportation?
Correct.
Yeah, as of right, the only thing we've seen definitive guidance on related to transportation would be gas for a business vehicle. So, for example, if you have a company truck or a van that you use in your day-to-day operations, the gas for that vehicle would be an allowable, eligible expense for forgiveness. We've not seen any further clarification on transportation as of this point. So we're waiting on further guidance for that.
Got it. And then another question just came in related to employee health, and I think you covered that, which it's my understanding that it is included, but not as part of the 75%, but rather the part of the 25%, correct?
No, that's not correct. The health insurance is part of the payroll costs. Health insurance and the retirement matches, so if a 401k match, the employer portion, those are included as payroll costs.
Got it. Is there anything you can collaborate or elaborate towards additional requirements for loans over $2 million?
So regarding the loans over $2 million, there's been a lot of talk, and I'm sure you've heard it in the news. Those loans will be scrutinized a little bit more carefully, and the borrower may have to show some sort of documentation or proof that they really needed those loans, those loan funds. What we're recommending is, do some projections, kind of take a look at wherever you are, fit geographically, what's going on with the COVID in your area, look at your supply chains, how are those chains being affected, and then down the road, how will it affect you? What were you projecting at the time that you made the loan application? What were you projecting the impact of this would be that made you believe that you needed these funds? And also, a really important one is take a look at, what would you have done differently if you didn't receive these funds? If you had access to other capital, whether it be from, equity or other debt that you could have drawn on, would you have drawn on that debt if you didn't get the PPP funds? If you would not have, and you would have ended up laying off people, is something else you want to document. So what would your decision process have been if you didn't get the PPP funds? And what was your justification for the fact that you needed these funds in order to be able to pay your people and sustain your business? And we just believe that there's going to be, basically anyone that received over $2 million is going to be scrutinized a little bit more closely and most likely audited to ascertain whether or not they really did need the funds.
So thank you for that, Dawn. Just to clarify, vehicle expenses such as fuel is considered an expense that can go towards that 25% forgiveness, right?
Yes, correct.
Okay. What if you have deferred any loans? Can you still use the accrued interest?
Well, remember, it has to be paid. So I believe if you paid anything that you paid during the 8-week period, then yes, you could use towards forgiveness. But if you didn't actually pay it out, then you would not be able to use it for forgiveness.
Okay, what if you're making a payment towards your lease or towards your rent that is past due before you got funded, but it happened during the crisis? is that something that's forgiven, or is that, does the invoice or the statement need to be in relation to when you got the PPP fund?
So anything that's paid during the covered period will be eligible for forgiveness. So even if it was incurred prior to the loan being received, the loan proceeds being received, as long as it's paid during that period. Also, on the other end, if it's incurred during the 8-week period, but you don't pay it until after the 8-week period, if you show that that invoice related to the time period within the 8 weeks, then that can also be eligible for forgiveness, even if it's paid at the outside of the after the 8-week period.
Got it. Does interest payments on machinery loans, will they be considered forgiveness or towards forgiveness? And what time frame can those interests be paid on?
Yes, interest on machinery loans will be eligible for forgiveness. And again, it's the same time period that we mentioned above. You know, if the payment was incurred, you know, the invoice came for it during the 8-week period, but wasn't paid until after, then that one would still be eligible. And then on the front end, anything paid within the 8-week period is also eligible.
Got it. So we have another few questions on the chat box. How do you calculate employee headcount?
That was a calculation was just clarified with the application process. Any employee that works 40 hours or more is considered 1 FTE. Any employee that works less than 40 hours is a partial FTE. You do have the option, however, of if you don't want to do that calculation, or if it's to your benefit, to use for anyone less than 40, you can just count them as half of an FTE.
Got it. There's a question that came in that says, are you required to pay employees who are now refusing to come back to work and may not return?
No. So there is another safe harbor that says if you make, and you have to make an offer in writing to them to come back, and if they decline the offer and you've made the offer in writing, your FTE, you will be able to kind of remove them from your look back period for your FTE. And that would include anyone that you fired for cause, or that left voluntarily, or that refuses to come back. You will not be penalized with your forgiveness eligibility for those events.
Do you have to replace them with somebody else, or those funds to go towards somebody else?
You do not, but if you can, it would be to your benefit, because that would mean that you would have more expenses that you're paying out to be eligible for forgiveness.
Yeah, so I think it's for clarity on that question, I believe it's for the FTE calculation for the forgiveness, but you still have to pay out the money. It doesn't count against the money that needs to be spent.
Right. Yeah.
So what about expenses that are forgiven through the loan, such as payroll, rent, and all those things? Will they still be tax deductible as normal?
Right now, the IRS has come back and said that they will not be deductible for income tax purposes. We do know that Congress has said this was not our intent, and they're battling that out right now. But as of right now, the IRS has said they will not be deductible, because the forgivable amount does not have to be recorded as income. Got it.
So just 2 points of clarification, Don, for now. The first one is, can you please discuss and address the owner/manager payroll process and expense? I think you talked about a $15,000 threshold before. Can you just discuss that one more time?
Yeah, so for the owners, if they're not W-2, S Corps and C Corps can have the owners be on payroll. If for those that are not, so if they're pass-through owners, so they don't take a salary, but they pay themselves through distributions, those people can pay themselves the lesser of $15,385, which is basically equates to 8 weeks worth of a salary of $100,000, or whatever their income on their 2019 Schedule C or K1 was, 8 weeks of that. And there's some adjustments if it's a K1, if there's, section 179 you have to make adjustment for, and then there's a little bit of an adjustment for self-employment tax on that. So there is a calculation, but it's roughly 8 weeks of whatever your self-employment income was in 2019 is what you're allowed to pay yourself, and it would be the lesser. So if you made less than $100,000 or reported income of less than $100,000 on your tax return in 2019, then you're going to be limited to that. If you made over the $100,000, then you can only pay yourself a maximum of the $15,385 during the 8-week period.
Got it.
And have it eligible for forgiveness. You can pay yourself more, you just can't, just won't be eligible for forgiveness.
Got it. And I think the first question that's on the screen, it kind of correlates to the next question that's on the chat box. And it basically says that, is the loan forgiveness based on a cash or accrual basis? For instance, can you prepay rent for future months, or do you have to have everything done on an accrual basis or a cash basis?
So it's kind of a hybrid. Basically, on the front end, it's a cash basis. So basically, it's saying anything that you've paid during that 8-week period is eligible for forgiveness. So as we talked about earlier, if you had a rent payment that related to maybe February or March that you weren't able to pay until you got the PPP funds in April, then you paid it in April, then that's allowable. On the back end, however, the rent invoice would have to be for a period, or the invoice received and dated within the 8-week period for you to be able to include it as eligible. So you cannot prepay, so you couldn't go out and pay, July, August, September within the 8-week period and have it be forgiven. But if you, depending on when your end date for your 8 weeks is, you theoretically could possibly have a June or a July invoice forgiven, even if you didn't, as long as it relate to a period within that 8 weeks, even if you didn't pay it until after the 8 weeks.
Okay, and now we're going to move on to talk about employee layoffs and bringing them back. If you made a written offer to someone that has been laid off and they reject it, is that part of the FTP? I think you touched based on that, the FTE calculation, although they're deciding to not come back?
No, again, you can, I did talk about that earlier. You don't have to include them in your look back calculation, yeah.
Got it. Which is most important for forgiveness, FTE count or overall dollars spent? Are they both equally important?
Well, I guess if you think about it this way, they're both important, but the more that you're able to spend, the more you'll have eligible for forgiveness. The FTE and the wage thresholds come into play only if you want to make sure that you maximize the forgiveness and don't have any of that reduced. So the more that you can pay from a expense perspective, the more you get in that 8-week period, the more you have eligible for forgiveness. From there, the FTE or the wage reductions could come into play to reduce that eligible amount even more. So I think number one would be, pay the money out, use it. And then number two, make sure that you're using it on the same number of people and that you're not reducing wages.
Got it. There's a question or a comment that says, on employee count, say you had 4 employees that worked each only 3 months out of the year, would they be considered one employee for the year?
Well, the FTE calculations are an average over the look back period and over the 8 weeks. So depending on when they worked and what look back period you selected, remember your look back periods are not for a full year. So it probably would be more beneficial for you, if possible, to select a look back period that did not include those people, because it could skew your comparisons if you didn't have them in the 8-week period, but you had them in your look back period, because it's an average. So depending on, again, what period you pick, they would be counted as full FTE during that period that they worked. It's not spread over a year. So it could be detrimental to you. Does that make any sense?
Yes.
Okay.
And so the other question that's on the screen, distinction between the hire FTE and rehire FTE, I think we talked about that one. Is there anything else that anybody would like to ask? Or John, is there anything else you'd like to address? I think we've gone through most of the questions on the chat box as well as on the screen. Oh, wait, no, sorry. We need to go back to Jeff. So the question is that Jeff Payne has one employee allowed to count as more than one FTE or overtime hours paid. So if you're paying an employee more than normal based on overtime, does that count towards your FTE?
No, anyone 40 or over is considered one.
Got it. Definition of forgivable utility, for instance, solid waste contact or contract a utility expense.
We have not seen anything in the guidance that indicates that waste removal is an eligible expense, an allowable expense, but we're waiting on more clarification. We're hoping that once the SBA puts out a better definition of what is considered in utilities than what they've given us so far.
Got it. And then the other one that I think is also really good, it says definition of lease. Could that be used for a forklift, vehicle, copy machine?
Yes, yes, yes. We believe anything that's personal property, that's business related, could be included a lease as part of a rent payment.
Got it.
So the lease calculation is considered in the rent category. You don't have to figure out interest related to that lease to fall in the interest category.
Right. It would fall in the interest category if you didn't lease it, but you had a loan or a note on it. And then that would fall under the interest category. And you wouldn't be allowed to include, interest only, not the principal payment on that. So if you outright purchased it, but you financed it through a loan as opposed to leasing it.
I'm only going to assume a lot of our members have a capital lease with a dollar buyout. Is it depending on how they treat that lease on their books? Are they going to dig that far, or what do you suggest on that?
Yeah, that's a good question. I'm not sure how far. They are going to be asking for documentation, so they will want to see the lease agreement. I'm not sure how they're going to look at that, honestly, at this point. We've not seen anything definitive on that.
You think that's something that's going to be, if you're over the 2 million threshold, they're going to dig into more of that, or under the 2 million threshold? Or you're not sure?
I'm not sure. I would just say, I don't know how much they're going to really dig into that, considering that they're limiting any of those types of payments to 25%. The focus is really on the payroll piece. So, my recommendation would be focus first on payroll, pay as much as you can in payroll. And then, if they do focus on that, I mean, the amount that you will have paid out for that is only going to be 25% at most of what you paid out. So even if they disallow it, it shouldn't affect your forgivability too much.
So if you're an LLC and you're an owner, can you put yourself on payroll, even if you were in the past just doing distributions? No,
LLCs, if you're not an S corp, are not allowed to take payroll.
Can't put yourself on.
Yeah.
Okay, what about, I hear strategy, a lot of people are putting friends and family and kids on their payroll. Can you elaborate on that?
Yeah, we did not see anything in the forgiveness application, nor in any of the guidance up to that time either, that prohibits this. So as of this point, as long as it's reasonable and they are doing work for you, we would probably recommend, just in case you do, especially if you're one of those over 2 million loan applicants, we would recommend that you keep their salaries reasonable and you make sure that they are actually doing work for the business or are involved in the business in some way.
Okay.
Got it. There's a couple more questions on the chat box. And the first one is, what is as part of your rent, you pay property taxes twice a year and that payment occurs during the 8 weeks?
We believe if it's written into the rent agreement that it will be allowed. Property taxes outside of the rental agreement, we're saying no at this point. And we have been taking a very conservative view on all this where we don't have definitive guidance.
What about payments to profit sharing 401k plans for the previous year or from an audit of a previous year that are paid during the 8 weeks?
Based on the application that just came out, we believe, based on their definition of incurred or paid during the period, we believe that those might be eligible for forgiveness if paid during the 8-week period.
Got it. Can you please elaborate on acceptable methods of pay raises during the 8-week period?
Pay raises, is that what you said?
Correct. Yes. Salary increases or pay raises.
Yeah, I mean, I guess the guidance that I would probably give is, you know, make them reasonable and make sure you have a justification for them. You know, I wouldn't recommend, well, and the other thing you have to keep in mind too is, you know, you have to keep within that $100,000 limit. So you can't, any amount that you pay in that 8-week period is going to be annualized. So you can't pay somebody that was making $50,000 a year an extra $50,000 within that 8-week period, because that's going to be annualized and it'll be capped anyways. So I would say as long as you're not paying anyone, you know, more than the $15,385 during the 8-week period, you can kind of use that as a guide. But again, you know, you can't be giving out bonuses of 30 grand, because then when you annualize that over the period, you know, you're going to be limited to the 15,000 anyways. So as far as raises, I would limit it to that. Again, I would probably keep it reasonable and document your reason, your justification for giving the raise or the bonus.
Awesome. Another question came in: is loan interest on shareholder notes that are UCC filed with personal property as collateral forgivable?
So the only, if it's collateralized with the business property and it's a note on business, all right, so let me take that back. Mortgage debt only, so the loan or the note would have to be for a specific piece of equipment or a specific vehicle or something like that for it to be eligible for forgiveness. You can pay interest, so if you just have, you know, like a line of credit or another loan that is collateralized, but it wasn't specifically for that piece of equipment or for that property, then you can use the funds for the interest on that note, but it won't be forgivable.
There was a question that that we skipped over, Lorenzo, so I'll grab it. So what about payments to profit sharing or 401k from a previous year or from an audit of a previous year that is paid during the 8 weeks? Can that be forgiven?
Yeah, we do believe now that it can be, as long as it's paid within the 8-week period.
Okay. If you're involved in multiple companies with different ownerships, will that be combined for the $2 million scrutiny?
Yes. The affiliation rules will apply.
Got it. Good question. Any other questions, anybody? I'm exhausted.
Any other comments from anybody? Don, before people start jumping off, I want to thank you for the really valuable information. We're going to obviously be posting this conference on our website. As Don said at the beginning, this is not all the answers. This is just advice that is being provided to all of us very graciously by the team at Marcum and obviously by Don. So make sure that you guys are following the steps that you need to follow. And so again, Don, thank you. There's a couple more questions that are coming through. Is FTP or FTE at 40 hours or 30 hours?
40 hours.
And then what dates can you pick up employee count from?
So you can either use for your look back period, you could either use 2/15 of 19 through June 30 of 19, or you can use the first 2 months of 2020. If you're a seasonal business, you can also use May 1st of 19 through September 15th of 19. And then you can also, so anyone for your 8-week period from a payroll only perspective, for that 8-week period, you can select if you have a bi-weekly or more frequent payroll, you can select an alternate 8-week period that starts with your first pay period in that 8 weeks. So for example, if you got the PPP funds on April 20th and your next pay date starts April 26th, you can elect to have your 8 weeks start on April 26th for the payroll piece only. That wouldn't be for the other 25% things, and then go 8 weeks from that date as opposed to 8 weeks from the 4/20. But again, that's an election that you could make. So those are your two look back period and your 8-week eligible periods.
Don, as a clarification, I know that you put a head count number on the PPP application when you first applied for the loan. Is that going to be scrutinized the base year as well as the forgiveness, or are they going to take that number right off the application?
No, that number from the loan application was basically, it was a head count. It wasn't an FTE calculation. So it was a little bit of a different number that they were looking at. And we believe that that number was only asked for to make sure that you were under the eligible allowed of FTE or head count, people count of 500. So we believe that that's what that was for. The PPP application does ask, I believe, if I remember correctly, it does ask for the number of employees, but we don't believe that's going to be used for any of it. We know it's not used for any of the calculations.
No, but is it going to be part of the, because there's a comparison on the forgiveness, do you have to prove the before and the after?
Well, you don't know. You won't have to prove the before. That should have been done during the application process by the bank.
Okay.
You will have to provide payroll reports and documentation to support the FTE during the 8 weeks and for whatever look back period you're selecting. But no, you won't have to provide anything for what you used on your original application.
Okay, so sorry. Now I am a little bit confused personally myself, and so if you said you had 20 employees when you received the funds, do you have to have 20 employees as part of the 8-week period when you finish going through the 75% to get that forgiveness? Because
No.
I think I just different.
Yeah, no, we don't believe so. And they're asking for the number of employees at the time of the loan application and the number of employees at the time of the forgiveness application. But those two numbers don't come into play in any of the forgiveness reduction. And we've not seen any guidance that indicates that you have to get to that you have to be at that same number.
Got it. Another question that came in, is the current FTE count for forgiveness the average FTE over the 8 weeks? FTEs, I think we just talked about that one. Can you spend more than 75% on payroll? I believe the answer is yes.
Yes, yes.
If S Corp can owners payroll dollars be included in each company's if affiliation rules apply?
I believe the affiliation rules would apply, yes.
Got it. What if you have the same number of people holding the same positions as before the plan, but the average cost or hours dipped to about 35 while slow?
So there is another kind of safe harbor. If you did not make any layoffs from January 1st on, so between January 1st and I believe April 26th, if you didn't lay off any people, then none of the forgiveness reduction calculations would apply to you. You don't have to do the look back period and you don't have to look at the wages if you didn't lay anyone off. Or reduce wages, I should say, or reduce wages. So if you left kind of everything the same, then you don't have to do those calculations for forgiveness reduction.
Got it. Will there be a consulting service to help with making all these decisions?
Yes, you mean from Marcum?
Just overall, yes. Or John, are we putting together some sort of program? Okay.
Marcum is a service provider for the Rockhead Group, and as much as they loved us and loved talking for us and hosting our finance ambassador program in full transparency, I think they're hoping to pick up some work. So we will be sending out our contacts from Marcum, and they do offer a service to help support this this process as well.
Got it. Question came in. If you come to the end of the forgiveness period and still have some money left, are you required to spend the balance on payroll?
The way the guidance is written now, yes, you are. Well, 75% of it on payroll, yes.
Got it. So just to clarify it and put it in 3 bullet points. Forgiveness happens after you spend 75% of the funds on payroll, yes or no?
Yes. Well, let me just qualify that, because even if you spend less than 75% on payroll, you can still have some amount eligible for forgiveness. It just will not be full forgiveness.
Got it. But if you spend 75% of payroll, the funds on payroll, you can get 100% forgiven, correct?
Correct.
And the rest 25% you can spend buying bubble gum, or you can spend doing whatever else. You're forgiven at the moment that you hit the 75% threshold.
No, you still can only spend the other 25% on rent, utilities, mortgage interest.
So you have to have documentation for everything that you spend up to 100%, but it's only forgiven if you spend 75% of the funds on payroll.
Again, even if you don't spend 75% on payroll, you can have some eligibility for forgiveness. It'll just be reduced.
Got it.
Yeah, so as a clarifying question, I think, and David, you can chime in as well, but if you, after you submit for your forgiveness and you have money left over, so after the 8-week period, that becomes a loan. Can you spend that on anything else? Or is there, do you have to document how you spend that money as well? Or just, it's a loan and you use it as a loan?
It's a loan and you use it as a loan, but the way the guidance is written is, and we're hoping more clarification comes out on what happens after the 8-week period, because the way that the act is written right now, it reads, you must spend 75% of the proceeds on payroll and 25% on the other eligible allowable expenses, regardless of forgiveness. So the way that's reading now is the loan proceeds are what you can spend them on is limited even after the 8-week period. Again, we're hoping more guidance comes out that will indicate a little bit more clearly how they're going to police that, or how they're going to enforce that after the 8-week period. But the way it's written now, regardless of forgiveness, you still have to spend it on 75% on payroll and 25% on the other eligible or allowable expenses.
So Dawn, another question that came through by text is, if you received, I guess there was 2 different times of funding, and if you received $10,000 at first, and then you received the PPP, does that mean that you also qualify for the SBA loan that comes afterwards? Is there any correlation between the 3 as part of your experience? Because it seems like some people haven't heard on the SBA loan yet.
So there were 2 different programs. There was the Paycheck Protection Program, which has this forgivable piece related to it or as part of it. Then there was what we were calling the EIDL loans, which was the Economic Injury Disaster Loans. They were 2 separate programs. The EIDL loans were administered directly from the SBA. The PPP loans, although backed and enforced and administered by the SBA indirectly, you actually went to your bank and applied for those, and then the funds were dispersed from the bank. So the EIDL had a $10,000 advance associated with it, where by putting in the loan application, if you were eligible, you could get an advance of up to $10,000. And that changed throughout the process to be based later they started basing it on number of employees. So if you had 1 employee, you were eligible for $1,000. If you had 10 employees, you were eligible for $10,000. That advance was forgivable. Even it turned into a grant if you were then not later awarded an EIDL loan. If you did get that grant and then you later, I think I said this a little bit earlier, and then you got the PPP and you used the EIDL for payroll, the advance, you could roll that into the PPP. If you got the EIDL loan before the PPP, then you could also roll that in as well. We believe at this point, if you get, because we know like the EIDL now, the advances were just starting to come out, and now we're seeing loans being approved as well. We believe you can have both as long as you don't use this EIDL proceeds for the same uses as the PPP proceeds. So those would be the proceeds that you would use for other expenses, such as, paying suppliers, office supplies, your maybe any software costs that you have, that kind of thing that would not be allowable under the PPP loan uses.
Got it. But if you got the $10,000 advance, that means that the loan is coming, or does that mean that it still can or cannot come?
It still could or could not. I've seen it both ways. I've seen some rejection letters, and I've also seen some people that have been approved for, up to a certain amount, and they need to choose whether or not they want to take those additional funds, depending on, if the PPP is going to be enough to sustain them or if they need more. The EIDL loans are just that, though. They're loans, and I believe they have an interest rate of 3.75%. Don't quote me on that because it's been a while since I've looked at it. And they're, yeah, and then the terms can be up to 30 years for those loans. Again, they're loans. They're not, no portion of those are forgivable. I also believe that if you got the advance and you do take the loan from the EIDL, then that advance is rolled into the EIDL loan and is not forgivable anymore. If you decline the EIDL, you can still keep the advance and it will not need to be paid back. So it turns into a grant.
Got it. And there's a question on the chat. You are able to use the EIDL loan towards paying off equipment loans, correct?
Yes.
Got it.
The only thing you can't use the EIDL loans for is expansion, and you can't pay off existing debt. You can use it to make your payments, but you can't pay it off. Like, you can't use it as a refinancing tool.
Got it.
Yeah, so you can't use it to pay off equipment loans, but you can make it to make the monthly payment on the loan.
Correct. Yeah.
Got it. There's a question that came in via text, and it was kind of asked in a different way. I know we talked a lot about full-time equivalents, but I want to ask it anyway, just to make sure. So there was different correspondence going out in the marketplace that full-time equivalent can be 32 hours divided by the 40, or is it you have to hit the 40?
The application that just came out indicated that it needed to be 40. There was a lot of speculation prior to the forgiveness application coming out, whether it would be 30 or 40, or whether it be something in between. We actually at Marcum assumed that it would be 30, just because historically the SBA has used a 30-hour work week, but the application specifically says it's 40 hours.
Got it. There was another question in the chat box, I think, and forgive me if this one was addressed, but do you have any feeling in interaction with various banks? Is there going to be different interpretation versus your bank that you currently use? And is it important to really get a good understanding from them as well? Because they're going to interpret different than maybe what we hear on this call?
That's a good question. I don't know how the banks are going to interpret it. I believe the SBA is dictating what they want to see. It will be up to the banks to gather the documentation, though. So I think it would probably make sense to talk to your bank and see what they're saying. I mean, we ran into the same issue with the application process itself, where banks were making their own interpretations, and you know, we had people that got denied one place and went to another place and were able to get the loan. So I can definitely see that happening again with the forgiveness piece of it. So I think it would probably make a lot of sense to talk to your bank and find out what they're going to be requiring and how they're interpreting the guidance that the SBA is putting out.
Got it.
All right. Well, John, again, thanks so much for all the advice and all the wonderful information. John, thanks for putting it all together. I want to remind everybody that we do have a Rockhead Ambassador program that is both operational driven as well as finance and administration. Mike, whom you guys met in St. Louis, I'm sorry, in Nashville, will be leading this program. And we ask that you invite everybody in your finance team to be part of these discussions and these calls. This is not going to be part of our monthly calls for the overall group. This is going to be specifically driven on finance and for your finance team. Our first call is June 10th. So please go register on our website to be part of the program, as well as save the date. Note that this program is something that is also another Rocket member exclusive. So by all means, please take advantage of that.
I want to kind of expand on this. It's a Rockhead. We're trying to make it Wednesdays, so just to have it, have your finance teams, if we could really get the contact people, and Amanda's going to be reaching out to get the finance team and your administrative team. We're going to really gear the programming towards them, and we're trying to keep a consistent monthly date, which would be Wednesdays at 2 o'clock month to month, and then also encourage to bring someone from your finance team. We're going to have breakout sessions when we eventually can get face-to-face, which we moved the meeting that was going to be at Discover. Thank you, Victor, which we moved to October. Hopefully we'll be able to make that date, but we'll also be having breakout sessions around that finance group, and Operation Ambassador group will also have its own breakout session. So this is kind of now restarting that program that we mentioned in the at Tice.
All right. Well, if you guys don't have any questions, we want to thank you for your time, and we look forward to seeing you again very soon, and to our next call, which will happen to be announced at the end of this week. So have a great rest of the day, and we'll talk to you guys later. Thanks a lot.
Thank you, guys. To John Ryan.